Vanguard was founded in 1975 by John C. Bogle, who envisioned a company that would prioritize the needs of individual investors over profits. This revolutionary approach was rooted in the belief that investing should be accessible and affordable for everyone. Vanguard's founding principles emphasize low-cost investing, transparency, and a commitment to putting investors first. The company's mission is to serve individual investors by providing them with the tools and resources necessary to achieve their financial goals. Vanguard operates under a unique structure, where it is owned by its funds, which in turn are owned by the investors in those funds. This client-owned model sets Vanguard apart from traditional investment firms, ensuring that profits are reinvested to benefit investors, rather than lining the pockets of shareholders. By focusing on the individual investor, Vanguard has established itself as a leader in the investment industry, paving the way for a more equitable financial landscape. Vanguard operates under a unique client-owned structure that fundamentally sets it apart from traditional investment firms. Unlike typical companies that prioritize shareholder profits, Vanguard is owned by its funds, which in turn are owned by the investors themselves. This means that any profits generated are returned to the investors in the form of lower fees, enhancing the overall value for clients. Traditional investment companies often focus on maximizing returns for external shareholders, which can lead to higher costs for investors. Vanguard's model fosters a culture of alignment between the firm and its clients, ensuring that the interests of investors are prioritized. This client-centric approach not only promotes transparency, but also encourages a long-term investment perspective. As a result, Vanguard has become a leader in low-cost investing, making it accessible for individual investors to participate in the financial markets. This innovative structure has reshaped the way investment firms operate, emphasizing the importance of serving the client first. Low-cost investing is a revolutionary concept that has transformed the financial landscape, making investing accessible to everyone. Vanguard, under the visionary leadership of John Bogle, pioneered index funds, which are designed to track the performance of a specific market index rather than relying on active management. This approach minimizes costs associated with frequent trading and management fees, allowing investors to keep more of their returns. By introducing index funds, Vanguard democratized investing, enabling individuals from all walks of life to participate in the stock market without incurring exorbitant fees. This shift not only empowered individual investors, but also challenged traditional investment firms that often prioritized profit over client interests. Vanguard's commitment to low-cost investing has set a benchmark in the industry, encouraging other firms to adopt similar strategies. As a result, the investment community has witnessed a significant movement towards passive investing, fundamentally changing how people approach wealth accumulation and financial planning. Since its inception in 1975, Vanguard has experienced remarkable growth, transforming the investment landscape in profound ways. Initially starting with a mere $1.5 billion in assets, Vanguard now manages over $7 trillion, making it one of the largest asset managers globally. This growth can be attributed to its pioneering approach to low-cost investing and the introduction of index funds, which have significantly lowered the barriers to entry for individual investors. Vanguard's client-owned structure ensures that profits are returned to investors, fostering a culture of trust and loyalty. This model has not only attracted millions of investors, but has also pressured other firms to lower fees, creating a ripple effect across the industry. As Vanguard continues to expand its offerings and reach, its influence on the investment landscape remains undeniable, encouraging a shift towards more accessible and affordable investment options for everyone, ultimately reshaping how people think about investing. Vanguard's immense growth has not been without its share of criticisms, particularly concerning its size and influence in the financial markets. Critics argue that as one of the largest asset managers globally, Vanguard wields significant power over the companies in which it invests. This influence raises concerns about corporate governance and the potential for conflicts of interest, as Vanguard's voting power in shareholder meetings could shape company policies in ways that may not align with the interests of all shareholders. Additionally, some industry experts worry that Vanguard's dominance could stifle competition, leading to a less diverse investment landscape. The sheer volume of assets under management may also create challenges in maintaining the same level of personalized service that individual investors expect. Furthermore, as passive investing gains traction, there are fears that market efficiency may be compromised, resulting in unintended consequences for the broader financial ecosystem. These criticisms highlight the need for ongoing dialogue about Vanguard's role and responsibilities in the market. Vanguard places a strong emphasis on investor education, recognizing that informed clients are empowered clients. Through a wealth of resources, including articles, webinars, and interactive tools, Vanguard aims to demystify the investing process. Their educational initiatives cover a range of topics, from the basics of investing to more complex strategies, ensuring that investors of all experience levels can find valuable information. Additionally, Vanguard's website features a dedicated section for educational content, offering insights into market trends, investment strategies, and personal finance tips. This commitment to education not only helps clients make informed decisions, but also fosters a sense of confidence in their investment choices. Vanguard also conducts workshops and seminars, providing opportunities for clients to engage directly with investment professionals. By prioritizing education, Vanguard empowers its clients to take control of their financial futures, ultimately leading to better investment outcomes. This approach aligns with Vanguard's mission to serve individual investors and promote long-term financial well-being. Let's explore some inspiring case studies of individual investors who have leveraged Vanguard's investment strategies and low fees to achieve their financial goals. Take Sarah, a 30-year-old teacher who started investing in Vanguard index funds early in her career. By consistently contributing to her retirement account, she has seen her investments grow significantly due to the power of compound interest and low expense ratios. Then there's John, a small business owner who wanted to secure his family's future. He chose Vanguard's balanced funds, which provided both growth and income. Over the years, he has benefited from stable returns that allowed him to fund his children's education. Lastly, we have Maria, a retiree who relied on Vanguard's low-cost ETFs to maintain her lifestyle post-retirement. By keeping fees low, she has maximized her income from investments. These stories highlight how Vanguard's approach empowers individual investors to build wealth and achieve financial independence. Vanguard's investment choices raise significant ethical questions, particularly in the realm of socially responsible investing, SRI. As a major player in the financial industry, Vanguard must navigate the delicate balance between maximizing returns for its investors and adhering to ethical standards. Critics argue that the firm's substantial investments in industries like fossil fuels and tobacco contradict its commitment to sustainability. Vanguard has responded by emphasizing its focus on shareholder advocacy, encouraging companies to adopt more responsible practices. Moreover, Vanguard's approach to SRI is evolving, as it increasingly offers funds that align with environmental, social, and governance (ESG) criteria. This shift reflects a growing demand from investors who prioritize ethical considerations alongside financial performance. However, the challenge remains. Can Vanguard genuinely influence corporate behavior while maintaining its low-cost investment model? Ultimately, the ethical implications of Vanguard's investment strategies highlight the broader conversation about responsibility in finance, urging investors to consider the impact of their choices on society and the environment. Vanguard has been a pivotal player in the rise of passive investing, fundamentally altering how individuals approach the market. By championing index funds, Vanguard made investing accessible and affordable, allowing investors to track market performance without the hefty fees associated with active management. This shift has led to a significant reallocation of assets, as more investors gravitate towards low-cost options, thereby challenging traditional active management strategies. The success of Vanguard's model has prompted many active managers to rethink their approaches, often resulting in a focus on niche markets or specialized strategies to differentiate themselves. Critics argue that this trend could lead to a homogenization of investment strategies, where fewer firms dominate the landscape. Nonetheless, Vanguard's influence has undeniably pushed the entire industry towards greater transparency and lower costs, forcing active managers to justify their higher fees in an increasingly competitive environment. The implications of this shift continue to resonate across the financial sector. When comparing Vanguard's performance with other investment firms, it becomes evident that its low-cost structure and focus on index funds have yielded impressive results. Vanguard consistently outperforms many actively managed funds, largely due to its lower fees and a disciplined investment approach. For instance, numerous studies reveal that over the long term, a significant percentage of actively managed funds fail to beat their benchmark indices, while Vanguard's index funds often deliver solid returns. This performance comparison has profound implications for investors. By choosing Vanguard, investors can potentially enhance their returns by minimizing costs, which is crucial in wealth accumulation. Moreover, the trend towards passive investing, championed by Vanguard, suggests a shift in investor preference, emphasizing the importance of cost-effective strategies. As more investors recognize the benefits of Vanguard's approach, the competitive landscape may force other firms to reevaluate their fee structures and investment philosophies, ultimately benefiting the overall market. Vanguard is committed to evolving in response to the dynamic financial landscape. As investor preferences shift towards sustainable and responsible investing, Vanguard plans to enhance its offerings in ESG, environmental, social, and governance funds. This aligns with the growing demand for investments that reflect personal values. Additionally, Vanguard is focusing on technology to improve client engagement and streamline investment processes. By leveraging data analytics and artificial intelligence, they aim to provide personalized investment solutions that cater to individual needs. Moreover, Vanguard recognizes the importance of adapting to changing market conditions, including interest rate fluctuations and economic uncertainties. Their strategy involves maintaining a diversified portfolio approach while exploring new asset classes that can offer stability and growth. Vanguard also intends to strengthen its educational initiatives, ensuring that investors are well informed about market trends and investment options. This proactive approach positions Vanguard not only to meet current investor demands, but also to anticipate future challenges in the investment world. As Vanguard continues to grow, its dominance raises several potential risks for the investment industry. One significant concern is the concentration of market power. With a large share of assets under management, Vanguard could inadvertently influence market trends, leading to systemic risks. This dominance may also stifle competition, as smaller firms struggle to compete with Vanguard's low-cost offerings. Furthermore, the sheer size of Vanguard can lead to a lack of agility in responding to market changes, potentially leaving investors vulnerable during downturns. Another risk involves the potential for conflicts of interest, as Vanguard's management decisions could prioritize asset growth over investor welfare. Additionally, the reliance on passive investing strategies could create market inefficiencies, as many investors follow the same indices without considering underlying fundamentals. Lastly, as Vanguard becomes more entrenched in the market, it may face increased scrutiny regarding its governance and accountability, which could impact investor trust. Vanguard's relationship with its investors is rooted in a commitment to transparency and accountability. As a client-owned firm, Vanguard prioritizes the interests of its investors, ensuring that they are informed and engaged in their investment journey. This unique structure fosters a culture of openness, where investors are encouraged to ask questions and seek clarity on their investments. Vanguard regularly publishes detailed reports on fund performance, fees, and investment strategies, empowering clients with the knowledge they need to make informed decisions. Accountability is further emphasized through Vanguard's governance model, which holds management accountable to investors rather than external shareholders. This alignment of interests helps build trust and confidence among clients. Moreover, Vanguard's proactive approach to addressing investor concerns reflects its dedication to maintaining strong relationships. By prioritizing transparency and accountability, Vanguard not only enhances investor satisfaction, but also sets a standard for the investment industry, demonstrating that client-centric practices can lead to long-term success. Vanguard is not just a leader in investment management, it also prioritizes community engagement and social responsibility. Through various initiatives, Vanguard aims to make a positive impact on society. One of its key efforts is the Vanguard Charitable Program, which encourages philanthropy by allowing clients to manage their charitable giving more effectively. Additionally, Vanguard supports financial literacy programs, helping individuals understand personal finance and investment strategies, which empowers them to make informed decisions. The firm also participates in community service projects, encouraging employees to volunteer and contribute to local causes. Vanguard's commitment to sustainability is evident in its investment strategies, focusing on environmentally responsible companies. By promoting diversity and inclusion within its workforce and investing in underrepresented communities, Vanguard strives to create a more equitable society. These initiatives reflect Vanguard's mission to not only serve individual investors, but also to uplift communities and foster a culture of giving back. Vanguard is at the forefront of technological innovation, focusing on enhancing the client experience through cutting-edge solutions. One significant advancement is the development of a user-friendly digital platform that allows investors to manage their portfolios seamlessly. This platform provides real-time access to account information, investment performance, and personalized insights, empowering clients to make informed decisions. Additionally, Vanguard has integrated artificial intelligence and machine learning to offer tailored investment recommendations based on individual risk profiles and financial goals. The introduction of robo-advisors further simplifies the investment process, making it accessible to a broader audience. Vanguard's commitment to cybersecurity ensures that client data remains protected, fostering trust and confidence. Furthermore, the firm actively engages clients through educational webinars and interactive tools, enhancing financial literacy. By leveraging technology, Vanguard not only streamlines operations, but also prioritizes the investor experience, ensuring that clients feel supported and informed throughout their investment journey. The regulatory environment plays a crucial role in shaping Vanguard's operations and the broader investment industry. Regulations such as the Investment Company Act of 1940 and the Dodd-Frank Act impose strict guidelines on investment firms, ensuring transparency and protecting investors. Vanguard, as a client-owned firm, must navigate these regulations while maintaining its commitment to low-cost investing. Compliance with these regulations not only safeguards investors, but also promotes fair competition within the industry. Additionally, the rise of fintech and robo-advisors has prompted regulators to adapt existing frameworks, impacting how Vanguard and its peers operate. Vanguard's proactive approach to regulation includes advocating for policies that benefit individual investors, reinforcing its mission. However, regulatory changes can also pose challenges, such as increased compliance costs and potential limitations on product offerings. Overall, understanding the regulatory landscape is essential for investors, as it directly influences Vanguard's strategies and the investment opportunities available in the market. Vanguard's global expansion has significantly influenced international investors, marking a transformative shift in the investment landscape. As Vanguard ventured beyond the United States, it introduced its low-cost investment model to various markets, appealing to a diverse range of investors. This expansion has democratized access to investment opportunities, allowing individuals worldwide to benefit from Vanguard's index funds and investment strategies. International investors have gained access to a wealth of resources, including educational materials and tools designed to empower them in their investment decisions. Vanguard's commitment to transparency and low fees has resonated with clients globally, fostering trust and loyalty. Moreover, the firm's presence in international markets has encouraged competition, prompting other investment firms to reconsider their fee structures and investment approaches. As a result, Vanguard's expansion has not only benefited individual investors, but has also contributed to a broader movement towards more equitable investing practices worldwide. Vanguard's unique structure as a client-owned investment firm positions it as a people's fund, prioritizing the interests of individual investors over profit maximization. However, as Vanguard continues to grow and influence the investment landscape, concerns arise about its potential to become an empire. The sheer scale of its assets under management raises questions about market dominance and the implications for competition. While Vanguard's mission remains rooted in democratizing investing, its size could inadvertently lead to a concentration of power that may overshadow its original purpose. This duality presents a challenge: how to maintain its commitment to investors while navigating the complexities of a vast financial empire. Vanguard must continuously reflect on its core values, ensuring that it remains accountable to its investors and prioritizes their needs. Balancing these aspects is crucial for Vanguard to sustain its identity as a people's fund, while managing the inherent risks of growth and influence in the financial markets. Throughout this discussion, we have explored Vanguard's founding principles, emphasizing its mission to serve individual investors. We examined its unique client-owned structure, which sets it apart from traditional firms, and how it pioneered low-cost investing through index funds. Vanguard's growth has significantly shaped the investment landscape, despite facing criticisms regarding its size and influence. We also highlighted its commitment to investor education, empowering clients to make informed decisions. Case studies showcased individual investors benefiting from Vanguard's strategies, while discussions on ethical implications and socially responsible investing illustrated its broader impact. The rise of passive investing and Vanguard's performance compared to other firms shed light on its significance in the financial world. Understanding Vanguard's role is crucial for investors, as it not only reflects market trends, but also influences investment strategies. By grasping these key points, investors can navigate their choices more effectively in an evolving financial environment. As we conclude our exploration of Vanguard, it's essential for investors to critically assess the firm's significant influence in the financial markets. Vanguard's unique structure and commitment to low-cost investing have transformed the landscape, but with great power comes great responsibility. Investors must recognize that while Vanguard offers numerous advantages, such as lower fees and educational resources, they should also be aware of potential risks associated with its dominance. The investment landscape is constantly evolving, and investors must remain vigilant and informed. Understanding Vanguard's strategies and their implications can empower individuals to make decisions that align with their financial goals. By critically evaluating Vanguard's influence, investors can navigate the complexities of the market more effectively. Ultimately, informed choices are key to achieving long-term financial success. As Vanguard continues to shape the future of investing, let us remain proactive in our investment journeys, ensuring that we harness the benefits while mitigating the risks.